Hello everyone. You are listening to Kotak Securities Weekly Fundamental Podcast. I am your host Rini Mehta. Indian stock markets declined last week in line with weakness seen in the global markets. Market recovery on Friday halted weekly losses to some extent. Correction in BSE midcap and smallcap was a tad higher as compared with Sensex and Nifty, and most sectoral indices posted negative returns. Now if we see on the economy front, the RBI Monetary Policy Committee hiked repo rate by 50 basis points to 5.9%. The RBI policy is on expected lines and there have not been any material surprises. The governor mentioned that input costs on manufacturing are coming off. The concern is fuel related now. He also implied that he shall aid to maintain sufficient liquidity in the system. Yields have marginally come off post-policy and marginal drop in GDP estimate does exist, but some participants expected them to be lower. Meanwhile, current account deficit in first quarter widened to $23.9 billion, that is 2.8% of GDP, which was $13.4 billion in fourth quarter, that is last quarter. In the immediate term, the market will likely follow global trends and gradually the focus will move towards the upcoming result season. Amidst all this, FIIs, that is foreign institutional investors, turned net sellers month till date to the tune of rupees 18,038 crores. As per Bloomberg data, foreign portfolio inflows in the month of September till date was positive for Indonesia to around $194 million. On the other hand, Philippines, South Korea, Taiwan and Thailand witnessed outflows. Globally, UK government's expansionary fiscal policies amid elevated global inflation roiled the global currency markets and resulted in risk-off sentiment in equities. Now moving on to the stock picks and updates. DLF's performance for FY22 can be characterized by 3 points. First is strong pre-sales in the residential business of rupees 72 billion, which was 136% higher year on year. Second is aggressive debt reduction to rupees 26 billion from 48 billion rupees as of March 21. And third is steady performance from DLF Cyber City developers aided by improved visibility for projects under construction. Then a performance for FY23 will likely be contingent on continued launches of new residential projects and improved leasing for commercial projects, even as we highlight the strong potential of the Gurgaon market. So we maintain buy on the stock with fair value of rupees 410 per share. Lastly, our pick of the week is JK Paper with buy rating and a target of rupees 450. The company had reported strong performance better than estimates, driven by higher volume and strong realizations. The revenue during the quarter grew 116% year on year and 7% quarter on quarter to rupees 1,430 crores. EBITDA grew 122% year on year and 26% quarter on quarter to rupees 423 crores. With an EBITDA margin of 29.6%. The industry took multiple price hikes in the last few months to pass on the increase in costs, which resulted in higher net realizations. Gross margin got impacted during the quarter due to contribution from packaging board segment and reduction in finished good inventories. Strong operating performance and lower tax outgo led to 151% year-on-year and 55% quarter-on-quarter growth in PAT to rupees 264 crores. So we feel that JK Paper is better placed to capitalize on this demand, and at current market price, stock trades at 6.2 times FY23 and 5.3 times FY24 earnings, which in our view is attractive given the sector tailwinds in terms of growing demand and firm pricing. So we maintain, so you can consider buying the stock as I mentioned, with a target of rupees 450, which was 400 earlier. So guys, that's all for today. See you again next week. Signing off.